If you find yourself wondering what to do with the money that I don't have any money in here. I just have like 6 credit cards. I need to be like all those other people and flash stacks of cash. But if you're wondering what to do every 2 weeks when you get paid by Amazon, or every day if you watched yesterday's video. The video was like a week ago. I got a little burnt out, and even though it's like 6 days later, I'm still wearing the same shirt. But even though they just updated it so you can get paid pretty much daily by Amazon, if you always get that deposit in your bank account and wonder what to do with it, wonder if you can pay off your credit cards or even pay yourself, I just want to invite you into my life and show you exactly how I do it every couple of weeks. Because 2 times a month, I'll break out my laptop, head over to a spreadsheet that I have pre-made right here. It's a little complicated looking, and I'll send money into 6 different places. It doesn't have to be all that for you, but let's break down exactly what I do every time I get a seller payout from Amazon and how I came to these numbers so that I can make sure that I can pay myself, pay off my inventory, and grow my business. This is super important, and I haven't heard anybody else talking about this, but before I quit my job to go full-time on Amazon, I needed to make sure that it was sustainable, and for me, being a big numbers nerd, that meant I needed to know exactly how much I needed to sell every month to make sure that I was able to continue living while I was selling on Amazon. So to figure this out, you're gonna need 4 different numbers that you might never have heard of before. And personally, I use InventoryLab to track all of my inventory, send in shipments and everything, and so I'm able to pull a lot of this from InventoryLab, and I'll show you how to do that in a second. But if you don't have InventoryLab yet, you can still get these numbers by just tracking from now till the next month so that you can figure these things out and move forward from there. These are the 4 numbers. The first one is the payout percentage, the second is the profit percentage, third is the COGS percentage, which stands for cost of goods sold, and the fourth is how much money you need as monthly income. Let's get a top-down shot so we can figure out exactly what each of these mean and then how we can find them on InventoryLab if you have it. All these numbers are going to be monthly numbers. You can do this every 2 weeks, but monthly is probably a little bit easier. And the reason I like this is because if you get paid out every 2 weeks, you'll get 2 months out of the year that you get 3 payments, and you can use that extra to pay off a lot of inventory, grow your business, or give yourself a bonus. Your payout percentage is your monthly payout divided by your monthly sales. This will be really important for your sanity, so you'll know how much you need to sell to hit your goals. And this is the main number that saved me a lot of stress, but we'll get to why towards the end of the video. If you're wondering how you get your payout just from something like InventoryLab, it's pretty simple because your sales can be broken down into 3 categories. The first are going to be Amazon fees. The second is your cost of goods sold, so how much you bought. And the third is going to be your profit. But your payout is going to be your cost of goods sold and your profit. So if you go into InventoryLab, I'm just going to go to May, some random month from 2021. If we add up all of the total income here, 292, 2057, 3081, which goes by every week. And a faster way to do that is just go back to the yearly view and look at May. So $10,710.76, the sales number. In order to get our monthly payout number, we have to subtract the Amazon fees because this is the payout. So if we go back to just looking at May, we can look at the monthly expenses over here. I'm not going to mark on my laptop and see that cost of goods sold is a pretty big number. We'll need to know that. So we'll just write that down here, 3705. And then all of these other expenses, selling fees, FBA transaction fees, FBA inventory and inbound services, those are going to be the other Amazon fees. So if we add the rest of those up, we'll get the total amount of $45.33.86. And so to get our monthly payout, we subtract 10, 7, 10, 76, the sales minus the Amazon fees, and we'll get $6,176.90. I'm just going to put all those numbers at the top real quick. And we could pull this directly from InventoryLab, but we could also just calculate the profit, and all we do is subtract sales minus Amazon fees minus cost of goods sold, and we'll get a profit of $24.71.78. These are the 4 numbers that we'll need to calculate the payout percentage, profit percentage, COGS percentage, and you'll just need to know how much you want to make. That's how you find that out on InventoryLab. You can calculate all this yourself, but it will be a little bit more difficult. And honestly, I'm a little bit interested because I didn't plan on actually going into InventoryLab and looking up what the numbers were for any specific month. I just put down general numbers in my script, and we'll see if it actually works out to be what it is. Stick with me. I know it's a lot of numbers. Grab some coffee. Let's take a drink together. There will be more numbers, but if you get this right in your business, this is how you can actually grow it to the point where you want it to without a lot of stress and based on a lot more actual data instead of just hopes and dreams. This profit is gross profit because it just subtracts out the cost of goods sold, doesn't include any other fees, and that'll be important in a second. Let's come back to these numbers in a second because I'm honestly really interested, but I'll go through with my example numbers because they're a lot more round than all of these freaking crazies with all of these cents and weird dollar amounts. But my example numbers were sales, and these are relatively typical for me, of $9,000, Amazon fees of $4,000, cost of goods sold of $3,000, and then gross profit will be the $2,000. And these are a lot easier numbers to work with right over here. I'll just fill in my income number real quick because that's what I need every month, and that's $1,000. But let's calculate these other ones real quick for the example. The payout percentage is going to be the monthly payout, which is $9,000 in sales minus $4,000 in Amazon fees, so $5K out of the total monthly sales of $9K. And that gives us a payout percentage of 55%. Here's the thing though, unless you're selling the same thing every single month, month after month, you might not always get paid out this exact payout because of your reserve balance, which is why I calculate this based on InventoryLab numbers versus my actual payout, because I will get my reserve balance. It just might not be in the same month that I make the sales, which is why that can be a little bit confusing. So if you do want to calculate this based on your actual Amazon numbers, I would add back in your reserve to what your payout is. But that video that I said was from yesterday talks a lot about reserve and understanding that, so you can watch that if you have more questions about the reserve balance. And so the payout percentage is 0.55555 repeating, so we'll just call it 55%. And then we need to get our profit percentage and our cost of goods sold percentage, but we really only need to calculate one of them, because if we subtract one from 100%, then we'll get the other, because those are the two things that make up your payout, your COGS, and your profit. Now for the profit percentage, you're not actually going to be dividing it by the overall sales amount. You're going to be taking your profit divided by your payout. So in this case, it'd be 2K divided by 5K, which is 40%. And so that would mean that since we subtract 100% minus 40%, we get a cost of goods sold percentage of 60%. That means, based on my example, whenever we get a payout, 60% of the total payout has to go right back into inventory to make sure that we're not going into further inventory debt. But it could be good to put a little bit more in there. I'm going to throw up all of the actual equations up here in case you're interested in the payment percentage, profit percentage, and COGS percentage equations, just so that you can have them while I calculate what the main numbers were, because I'm really interested to see if they were close to what I got over here. And it's kind of true, actually better in May. And the more I sell, the better these numbers turn out for me, like the higher amounts that I sell, because some costs are fixed and some costs are variable. And if you've ever watched The Office, the reason the Michael Scott Paper Company goes down is because they use a fixed cost versus a variable cost model, where in this case we need a little bit of a hybrid one. But all that to say, since some costs are fixed, you'll actually start to make more profit the more you sell, as long as your variable costs go up proportionally. That's probably a little confusing, but I want to keep that in for The Office reference. This is what's interesting. These are the main numbers. In May, my payment percentage was 57.67%, and I said 55%, which is actually good. That means Amazon's fees were less, and I do always try to stay on the conservative side, meaning that I think there are going to be more fees than there are. My profit percentage was right on 40.02%. My profit percentage here was 40%. My COGS percentage was 59.98%, and my COGS percentage here was 60%, which is good, because if I put 60% of my payout towards my cost of goods sold, then I'm actually putting more than what I spent that month. Okay, so now that we got that mess, we are going to have to talk about a few more numbers, but it should start to make a little bit more sense, because these are things you're going to be more familiar with, especially if you watch my channel before. And let's talk about what your business actually needs to do with the profit number, because Amazon fees are non-negotiable. They take it off the top. Cost of goods sold is kind of non-negotiable, as long as you don't want to be in a bunch of debt. You want to pay off your cost of goods sold, but the profit, that 40% number, $2,400 in May, normally around $2,000, is gross profit. And from that, you have to pay yourself, save for taxes, operate your business, like all your subscriptions that you have to do, save for later in your business if you want, and give yourself a little bit of a bonus through profit. But we'll get to all those things right now. Every time that I get paid from Amazon, and the transfers that we're going to be doing today, I want to transfer into 6 different accounts. Not all of them are necessary, but I would say 3 or 4 of them are for you. These are the 6 accounts. The first one is inventory. When I was getting started, I didn't really do any of this. I just put all of my payout back into inventory by paying off my credit cards, but now I'll put it into a savings account that I have, and then when my credit cards come due, I'll transfer money to the credit cards in order to pay them off. The second is one of my favorites, and that is owner pay, and that is what I use to pay myself every single month. I transfer money into that account. Since we have multiple different revenue sources in our LLC, we just transfer it all in there, and then one time a month we'll transfer money from owner pay for what we need personally to take out of the business. The third one is taxes. And does anybody else always have like the same colors when they think of things? For some reason, I always think of inventory as blue, owner pay and profit as greens, taxes as reds, obviously. But whenever you pay yourself, you should put at least 30% of whatever you take out to pay yourself in taxes so that you could save come tax time, but we'll get to that in a second. These are the 3 that are really kind of non-negotiable. The fourth one I think is as well. You can mix it in with your inventory account, but that can be confusing. But it would be operating expenses, which we're gonna abbreviate as OPEX. This would be like pay off your subscriptions and your shipping supplies, or to save for something like a new printer or a new laptop if that's something that you need, by putting more than you need every single month into that operating account for a bunch of months. Personally, the other 2 places that I put money are a profit account, which I've talked about before. You can just lump this all in with owner pay, but I have this as a separate account to bonus myself whenever I want to, just for being an owner of the business rather than working in the business. And the last one, you can do an operating expenses, and the only reason that we have it differently pretty much is because we have different departments, like for this YouTube channel and for the Amazon business and other things like that, and that is retained earnings. And so each of those different businesses puts into there in case we need like big upgrades for something. Why you gotta be so loud out there? So knowing which of these you need and knowing where you want to put your money every month, let's actually get to how we calculate what these numbers numbers are. And to do that, I'm going to write back up here our general percentages of payout percentage, 55%, profit percentage, 40%, COGS percentage, 60%, and $1,000 income per month. And the less you can take out in income every month, the better it's going to be for your business, because you can grow a lot faster by taking less money out. This is the beauty of living in a van and trying to shoot videos while also leaving the door open so it's cold enough and you get some light. You got deliveries going on all the time and construction over there. Now we're going to put down percentages for each of these, and that's what I have broken down in that spreadsheet, and that's how we're going to base our transfer of our $2,100. But the first one should be pretty obvious. For inventory, since our cost of goods sold is 60%, we need at least 60% to go into our inventory account to make sure that we pay off whatever we've spent on inventory. And at a basic level, that's absolutely true, but since I want to grow my business and I want to try to get out of debt a little faster, and since I only need to take out $1,000 per month, and normally I have $2,000 of gross profit, right now my inventory percentage is at 61.5%, plus a little bit at the end of the month if I can afford to. And so to figure out the rest of these, we really only have 38.5% of our payout left. And even though figuring out your inventory percentage is pretty easy, the rest of these take a little bit more finesse, and it'll be based on whatever you personally need. So let me explain how I did it myself. First, let's talk OPEX, operating expenses. Even though it's the fourth one on this list, it's going to be an important one to try to figure out. And this one's also going to be relatively easy because what you need to pay for operating your business is probably well known to you. It's going to be all the subscriptions and whatever shipping supplies you might need. If you haven't done this yet, it's another important thing to do in your business, and I did it and then added a little bit of a cushion for myself to figure out what this number should be. It's not as high for me anymore because I've paid off a lot of yearly subscriptions, but it used to be around $150 a month for my repricer, my InventoryLab subscription, inventory system, Scout IQ I also had. Now I have insurance at $50 a month, and also shipping supplies, which are about $20 per month for me. If I wasn't paying for the annual subscriptions, it'd be about $200 something for all this, but if we just take that $150 that it used to be for me, divide that by our $5,000 payout, that'll give us the percentage that we need to make sure that we're covering all the subscriptions, and that's only 3%. That's not a lot, and just in case I have a bad month where I'm not actually able to cover that, I have mine set at 4.9%, and we'll get to why the 0.9 in a second, but I do cap it at $220. That way, if I get a really good sales month, that money will go into more inventory instead of operating expenses, because I don't have that many operating expenses and I'm already over saving for them. Next is profit, and we'll get to why this is 4.9%, and that's because profit is just 0.1%. It's a very small amount. Normally equates to like $5 to $10 per month, depending on the month. That's more like a psychological thing, honestly. So subtracting these 5% for profit and operating expenses, we only have 33.5% left in order to pay ourselves, pay taxes, and save for retained earnings. And this one we're not really going to worry about. That'll just kind of be a catch-all for the rest of the percentages. So how do we figure out owner pay and taxes? Like I said earlier, this will be different for everyone, and the less you can take out of your business, the better. If you're wanting to grow, if you just kind of want to sustain it and take some money out and enjoy your life, that's fine too. When I was leaving my job, we knew that my wife's income covered about 2/3 of our monthly expenses, and I needed to take home at least $1,000 every month. So it would be easy to think, okay, let's take $1,000, divide that by the $5,000 payout, and we'll get 20%. But I don't want to take a lot of chances like that, and there's a lot of room left if we only take out 20%. Since I don't want to have that much pressure on myself, we could bump up this 20% number to something a little bit higher, which is why right now I have it at 25%. That way, just like in operating expenses, we have it at 4.9% instead of 3%. I can make sure that I'm operating my business and paying myself and not going into any further debt personally or business-wise. I do also cap this right now at $1,000. I had it capped at $1,050 before because that's all I needed. And after we hit that $1,000 here and $220 here, all the rest of that money actually goes up towards inventory so that we can pay off any of my inventory debt that I have and start to gain an inventory surplus. So the more I sell, the more money I can put back into my business. And so minus 25% here leaves us with 8.5% left, and since retained earnings will take the rest of that 100%, all we have left to figure out is taxes. And to figure this out, it's honestly pretty simple. But let me explain how I figured out how much you need to save in taxes. When you work for yourself, you don't only have to pay the state income tax or federal income tax, you also have to pay FICA tax. You did when you were working at your job as well, but now you have to pay double. That's because that's the tax that does like Medicare and Medicaid and stuff, and you paid half of it while your employer paid half of it. But now that you're self-employed, you're both the employee and the employer, so your FICA tax is going to be 15.3%. And then you're going to have to add in whatever state and federal income taxes you have. Luckily, I'm a resident of Florida, so I don't have any state income taxes, so now I just have to worry about federal income tax. But if you didn't know much about taxes, it's on a tiered system, so you pay 10% on the first $10,000 just about, and then you pay 12% on the next like $20,000 just about, but you also have standard deductions to worry about. And so just to be really simple, just get into a tax calculator and you can figure out what your effective tax rate would be. So if we go for a household income of 55 grand, which is way more than I'm going to take out of Amazon, this is not your gross profit or even your revenue, this is what you're taking home. So you'd I'd be having to take home $4,000 or more every single month to be at that point. Location, I'm going to put Florida. If you have a different location, I would definitely put that because it's going to change how much state income tax you have. And then we're going to keep the filing status as single just to make things easier. Then if we come down here, we'll see that our federal tax rate is only 9.39%. Effectively. The marginal rate is 22%, but because it's tiered and we have that standard deduction, we're effectively only paying 9% of what our total profit is, or total income. If you work other jobs and you make a higher income, just go and check that out. But you can figure out what the federal income tax rate is, your effective rate, and put that here. And so I just put 10%, because if you're single, if you're making $55,000, or married making $110,000, that's going to be your effective tax rate. And that is only, if we add those two together, 25.3%. Honestly, I don't think I'm going to have to pay more than that for a while, especially because I don't mind writing stuff off of my business. I don't plan on looking at buying a house soon, and that's the only reason why I wouldn't take as many write-offs as I can. I mean, I'm living in a van for 3 years now, but because I'm really conservative, I want to save more than this, just to make sure I have no problems. And worst case scenario, since I'm putting it in a savings account now, at the end of the year when I do my taxes, that's just going to become a bonus. And so I put 30% of my owner pay plus profit into taxes, which is more than 25.3%, but that's also because technically the money that you're saving for taxes is money that you have to pay taxes on. That's all confusing too, but let's get back to the other board. That doesn't mean though that you just put 30% here for taxes, because that would be on your overall payout. We're only paying that on the 25% owner pay and the 0.1% profit. Since I'm rounding everything up so much, we can round that down to 25% times 30% is equal to 0.075, or 7.5%. So whenever I get paid out, I take 7.5% of that and put it in a savings account for taxes, which is why right now I think we have like $4,300 in our savings account for taxes. And because of the amount of write-offs that we have, because of business stuff that we've started, we might only owe like $500 to $1,000, which is going to be a really nice big bonus at the end of the year. Now, subtracting that 7.5% out, we get 1% for retained earnings. And I know this is all really confusing, so if you don't have to worry about any of it at all, I would figure out how much you need to pay yourself, and that'll let you know what your percentage is here and what your percentage is for taxes, and put everything else just back into the business in one big account if you need to. I would just make sure that you're not taking too much out of the business, that you wouldn't be able to pay off your inventory and operate your business. All right, let's get into actually making these transfers and showing you how this translates to real life, what I do every 2 weeks. But real quick before that, there was one number that we really didn't look at too much, and that's the payout percentage. And let me explain real quick why that's important, because like I said at the beginning, this is a number that has saved me a lot of anxiety. The 3 things you're going to need to know for this are your income, so how much you want to pay yourself, your payout percentage, and also your owner pay percentage. Since I need to pay myself $1,000 every single month, and that is 25% of my payout, if I divide that $1,000 by 0.25, I know that I need to get at least $4,000 of payouts. And even though my estimations were around $5,000, that's why I bumped up my owner pay percentage from 20% to 25% to make sure that even if I get lower payouts, I'll be able to pay myself. But that's not where we stop, because we know that our payout is only 55% of our overall sales. So if we divide this by 0.55, and just to show you that I'm not making any of this up, we have 1,000 divided by 0.25 gives us 4,000, divided by 0.55 gives us only $7,272 every single month to make sure that I can get paid. And the reason that's important is because we can break that $7,200 down by day or by week. We'll just call it $7,300 to be a little more conservative, because I like that. So 73 divided by 30 days a month is only $242.50 per day. So as long as I'm selling more than that, I know I'm going to be able to pay myself, which is only about $1,600 per week. And that's the reason that these numbers can be so important, especially for your mental health, because I've had times when my sales dropped, like yesterday. Let me show you what happened. I was having a great sales week, and then yesterday I only sold $120, which we know is way less than the $242 that I need. But since it's only $1,700 total per week, I've already sold $1,900 in this 7-day period. So I know that we're still good. Stuff will just have to kick up, which is why I'm sending in a shipment today. I know, especially if you're not a numbers person, this can be really confusing. And if there's like any deliverable that I can give you guys, like a spreadsheet or something that can help you out, just let me know. But understanding these numbers has saved me a lot of headache in terms of understanding my business. And it's made it a lot easier to know what to do every time I get paid out, which, speaking of, let's make these transfers. To do that, we're just gonna head onto my laptop. I have this big spreadsheet right here. I'm making a separate video just on this spreadsheet because it's been so instrumental in my business. But essentially, take all my payouts that I get and add them up. It'll automatically add it up to me. So I have $2,104.24 to transfer. These are transfers that I've gotten after I wrote this video. And I have this last little thing that tells me how much left I need to get paid out by Amazon to make sure I'm at that $4,000 to pay myself. So this $2,100 number right here is going to get treated by all these percentages. 61% for inventory, 25 owner pay, 7.5 taxes, 4.9 OPEX, 0.1 profit, and 1% retained earnings. And that's all done up here at the top of this spreadsheet. So we have $2,100 in revenue, $2.1 goes towards profit, $526 for owner pay, $157 for taxes, $103 for operating expenses, $1294.11 for inventory. And so I'm heading into Chase right now and just going to transfer all those numbers into those separate accounts, since I do have them in separate accounts. And I do that twice a month, and I rarely worry about the numbers in my business. And I hope that this helps you to worry a little bit less. Let me know any questions you have, but I'll see you tomorrow.